Basically, anything that can happen will happen, and you should be prepared to be able to execute in the fog of war. And that is very quite similar to trading.
Hello and welcome back to another episode of Two Blokes Trading. Today's guest is Paul Wallace, a former fighter controller in the Royal Air Force who made the leap from managing chaos in the military op rooms to managing risk on trading floors. With over 25 years in the markets, Paul's traded for small funds, coached thousands of traders, and built a reputation in blending discipline, psychology, and practical strategy.
So tell me, you started from military, right? That background, then, did anything come across in terms of how your performance in trading, your risk management within trading?
A battle management game at the sort of start of the Second World War. They needed people who were mentally agile, comfortable in uncertainty, decisive, happy with doing maths in their head, etc. In terms of strength, one of the things about military veterans is that they are comfortable with risk. All right, you should always live to fight another day. You're going to have losing trades. You're a human, so you're going to make mistakes. But if you're not managing risk, if you think of capital is like your ammunition, if you're out of ammunition, you're out of the fight. And it's the same with trading. If you're out of capital, you're out of trading. So you should be managing risk always. And as I said, you should want to live to fight another day.
Psychologically, you're just happy just to allow that loss to put behind you, move on? Are you trying to recover those losses?
My inner Roy Keane is, do your job, all right? Do your job.
The whole psychology around trading, especially with new traders, is the fact that they cannot accept a loss.
That kind of tactic I use is called the Pac-Man tactic. And I know, for example, for this year, it has a 60% hit rate, 15% scratch rate, a 25% failure rate. So 1 in 4 trades, you generally lose this game, 1 in 4 trades. The hardest market lesson is that stay humble, all right? Stay humble, because if you don't, the market will humble you.
He's not just a trader, he's a battle-tested performance coach who's seen every single side of trading. Paul, lovely to meet you. Thanks for coming on to Two Blokes Trading podcast and taking your time out of your day to join us.
Yeah, my pleasure, Jonathan. Nice to be here. Nice to chat with a couple of Irish traders.
Yeah, absolutely. You have a bit of a decorated background. I'm really interested to see how you jump from into trading from the background that you're going to kind of talk us through now. But maybe tell us how you went from being an air traffic controller, moving towards trading. This is the second person I have lined up who had a similar background to yourself that went into trading. It's kind of interesting to see, is this something that's completely new, or is it something that is it logical? How do you implement what you learn through your training into your trading itself? So tell me a bit about your background.
Okay, so you're right. My background is different in the sense of, I didn't go through an institutional banking background or investment banking background. Originally, I was what they called a fighter controller, battle manager in the Royal Air Force. And here we go. It's a bit of a history lesson. When they started that kind of battle management game at the sort of start of the Second World War, they needed people to be fighter controllers. They needed people who were mentally agile, comfortable in uncertainty, decisive, happy with doing maths in their head, etc. And they realized the scientists that built the Dowding system were not the best people to do that. So actually, they went to the City of London and got stockbrokers and jobbers and traders to transition across to being fighter controllers during the Second World War. And so there's always been this kind of a great deal of sort of crossover between, and that's the job I was doing in the 90s. I only had a short contract, 6 years. And then at that time, banks in London were trying to poach guys doing my job and air traffic controllers to go and work on the trading floors. And that's what started my interest. Originally, I transitioned out of the Air Force and I was working in the city. I was working in kind of internet, telecom during the dot-com boom. And as part of my job of managing clients, I would get to go on to trading floors. And if I'm honest, I was a little bit underwhelmed by kind of what I saw.
Really, yeah.
In terms of there were some exceptionally good people, but there's not. I just realised, having come from operations rooms to trading floors, they are very, very alike. Very, very, very alike. But yeah, let's just say there was some excellent people there, but there was an awful lot of people who were there because of what school they went to, or who their dad
Right.
was, etc.
Yeah.
It wasn't on pure talent. And I just thought to myself, well, if you can't join them, beat them. And it was the start of the dot-com boom, and I was working in internet, and I just started to basically trade internet stocks because my job was a bit boring, and I just started to trade internet stocks on the side. I did well. I I got out about a week before it all crashed in sort of February, March 2000. But it was through pure luck. It wasn't any kind of fancy analysis or anything. I was just basically I was just lucky. I was very, very lucky, and but that got me started. And then basically over the years, I kind of try to work for myself, and then transitioned across to basically to sort of trading for a couple of small funds in London, and then basically that's how the journey started.
Wow. And so tell me, like you started from military, right? That background, then like did anything come across in terms of how your performance in trading, your risk management within trading? Obviously, you said you had a bit of a math background anyway, which would have helped. But in terms of how strict, how regimented you would have been within that kind of that period of time, did that then flow into your trading?
Yes, it did. But like all of these things, there were pros and cons. There was lots of things that I was able to leverage as strengths, but there was also some weaknesses I had to work on. Maybe I'll talk about them later. But certainly in terms of strength, one of the things about military veterans is that they are comfortable with risk. All right, you have a great risk awareness. All right, you have a great awareness of risk, not just in markets but in life generally, and that kind of probably you see the world through a kind of a different prism in that sense. So you are comfortable with risk. You are good at managing risk. You're also good in uncertainty. All right, the fog of war. That basically anything that can happen will happen, and you should be prepared to basically to be able to execute in the fog of war, and that is very quite similar to trading. Your ability to be comfortable with uncertainty is one of those kind of, I would suggest, one of the many strengths that good traders have, is that they not only are they comfortable with uncertainty, but they can operate, they can perform, that they can basically plan the trade the plan, manage the risk. Okay, they can do all of that in an area of absolute uncertainty. So
Especially in like a drawdown situation, right?
yeah, exactly. One of that elements is basically, I'm always, if you've seen anything I've done, I'm always banging on about managing risk, because one of those things as being like a battle manager is that you should always live to fight another day. Okay, you should never really be, where possible, you shouldn't really be sort of looking to lose a battle. You shouldn't be doing anything stupid. And it's the same with trading, really. You should always live to fight another day. You're going to have losing trades. You're a human, so you're going to make mistakes. But if you're managing risk correctly, if you're position sizing correctly, it should mean that your mistakes can steer you rather than sink you, and that allows you to live to fight another day. And you can live to fight another day. Well, then basically, I would suggest the grand part of a trader's journey is just grinding out being a better trader tomorrow than you were yesterday, until it all starts to click. But yeah, if you're not managing risk, if you think of like capital is like your ammunition, if you're out of ammunition, you're out of the fight. And it's the same with trading. If you're out of capital, you're out of trading. So you should be managing risk always. And as I said, you should want to live to fight another day.
I fully agree, but how do you balance that then in an actual real life situation? Like, tell
In
me,
terms of
like,
in markets,
yeah, in the markets. I mean, obviously, look, you emphasize discipline, risk management. Obviously, trading inherently involves uncertainty, but in the real life situation, when let's say you're managing your risk correctly, but it's just been a bad day, right? Psychologically, you're just happy just to allow that loss to put behind you, move on. Are you trying to recover those losses? Like how do you then just balance that
yeah,
yourself?
that's a good question. Right, I would suggest that a good part of it is knowing that your first job is to manage risk so that you live to fight another day. But then I'm in a position to understand, okay, what my edge is in the market. It might be a statistical edge, it might be a technical edge, it might be a behavioural edge. I would suggest some of my edges are behavioural edges. So why don't I use an example from yesterday? Yesterday was Tuesday morning. Okay, so the meat of my intraday trading is I'm an intraday FX trader. And my intraday trades are basically around the Asian session coming into the London session. As an intraday trader, my strategy is about mean reversion. As an intraday trader, it's different for swing, but as an intraday trader, I'm a mean reversion trader. So invariably, I'm waiting for markets to pull out and then basically reverse. Now, yesterday, my first trade was basically a short on pound Canadian dollar, and I knew just because that setup was most likely to fail. All right, it was most likely to fail. It just wasn't a great setup, but it met all my rules. In my inner Roy Keane is, do your job. All right, do your job. The setup's there. You put the trade on. So I put the trade on. It failed, and it failed quite quickly, and that's fine. If a trade fails, I'd sooner it failed faster, all right, because of emotional capital. I just want to basically, if I'm wrong, bang, I'm in, out. Basically, even though I've been trading for a long time, even though intraday trading FX market is my bread and butter, you take a losing trade, nobody likes it. You realise it's part of the gig, but nobody likes it. And I had to get up and go and have a little. I went and made myself some breakfast, made myself some bacon and eggs, had a bit of a chat to myself, saying, listen, that traders fail. It's just one trade. It means nothing to you. It says nothing to you. Get back in the game and basically get back in the fight and do your job.
Brilliant.
So by the end of the session, I had yesterday's session was 5 trades, 1 loss, 1 scratch, 3 winning trades. Okay, and that's the case of your first trade is a losing trade.
Yeah, get over
Welcome
it.
to trading.
Absolutely.
One trade doesn't define you. All right,
Yeah.
It's just a data point. All right, so it's about having that resilience to be able to say, it's just a trade. It says nothing about you as a human being. You followed your rules. You did your job. Get back in the fight. All right, and do your job. All right, that's routine. Do your job.
Absolutely. I mean, that's key. Like the whole psychology around trading, especially with new traders, is the fact that they cannot accept a loss.
Yeah.
Now, bearing in mind, if you're going to trade for a week or 2 weeks or a month, inherently you're going to take losses during that period. So without taking those losses, you're never going to be able to actually get those gains. And unfortunately, that's part of the process, and that's part of the system that you need to put in place to allow that. But just interesting that what you're speaking about there now, right? So you're in a situation where all your credentials are there. You're happy with this trade. It's lined up nicely for you, but your gut is telling you that this is probably a bad trade, right? Now, being in the markets for a longer period of time, like we have been, we definitely have this built up inner kind of intuition within the market. So with that, I completely get and understand it. Everything's lined up. It looks like a decent trade, but your gut's telling you, your bias is telling you this is probably a bad trade, right? What made you take that trade, even though your gut was telling you no, number one? And number two, is this kind of, it doesn't matter what your gut tells you? Do you not go on your gut feeling, or do you just purely base your strategy on your principles of, your strategy?
So in that particular case, the trade is on. All right, the trade is on. It's set up. It met my rules. The trade is on. Okay, and for that particular style of trading, okay, for that my intraday trading, the intraday FX trading, I just put the trade on. And the kind of interesting thing is, as I said, I've been doing this for a long time. That kind of tactic I use is called the Pac-Man tactic. And I know, for example, for this year, it has a 60% hit rate, 15% scratch rate, a 25% failure rate. So like 1 in 4 trades generally loses. Okay, 1 in 4 trades. So the thing is, even though I know those numbers, even though I know that I've got positive expectancy, A, that helps me put the trade on. But B, as I was saying earlier, even though the trade lost and I knew it was probably going to lose, you have to have a little word with yourself and realize it's just a data point, right? It's just part of the game. It's just, it's that kind of adage, isn't it? A boxing adage. Everybody's got a plan until they get punched in the face. And that's the same with trading. You have a trading plan, you step in, bang, your first trade of the day is a loss. All right. I appreciate that when you've got experience and you've got the data to back up and to see how it plays out, that, you know, you can step away and basically just reset yourself, have a bit of a word with yourself, all right, get a grip and get back in and do your job. But I do realize that when you're a new trader, that can be hard because you don't actually have that much experience. You know, you have taken thousands of trades, so it's easy to put one trade into perspective. You know, if you've only taken 10 trades in your life, that makes it pretty hard because you're emotionally invested in that trade. You want it to win. You might need it to win for external factors. Hence why, as a new trader, you know, I come back to, you know, you need to basically be trading with a stop loss and position sizing, okay, and almost trading mechanically.
Yeah.
Everybody likes to think they're an intuitive trader, but the reality is, it probably takes you 5 to 10 years to become an intuitive trader. All right. And I know many traders who've traded for a long time who they themselves would not consider themselves an intuitive trader. Intuition as a trader takes years, I would suggest probably 5 to 10 years. There'll be people who do it faster, people who do it slower, people might disagree, that's fine. But from my experience, that's what I'd suggest it probably is.
I agree. And I think, you know, if there's one thing that I could teach one trader and I could actually instill it into them, that, you know, that one thing, you know, speaking to thousands of traders, teaching thousands of traders, is that one thing, just try to think objectively. Put a certain set of rules in front of you, stick with those rules. Okay. While you're sticking with them rules and you're seeing it play out, then you can start to manipulate your strategy a little bit. And, you know, but that's the one thing. It just keep yourself in the game for as long as possible. And once you can do that, you're learning all the time. You know, that's it's just no point, you know, like I said, what's the point of letting a trade run against you? You're having 2-3 winning trades and then you let one trade run against you and it's just ruined your whole day. It's just, there's no point of it. And unfortunately it's psychology, and that kind of moves us on to, like, you know, psychology and strategy. You know, how much do you think your strategy is important as opposed to the psychology around that? Or do you think by thinking objectively, having an objective plan, that psychology doesn't come into the game?
No, psychology most definitely comes into the game. I think when you're a new trader, you're probably 90% focused on strategy and 10% psychology. Whereas actually, as a much more experienced trader, the tactics, that might only take 10%. You know, 10% of, like, maybe focusing on your tactics. It might be 15-20% of managing money, and then the other 70% plus is about managing yourself. It's about basically putting yourself in the right space to be able to trade. I remember reading early on. So my kind of professional trading hero is Paul Jones. So both called Paul. We both have glasses. We're both born on 28th of September. You know, there's kind of he's my professional trading hero. But if you read his chapter in the First Market Wizards book, he talks about profits come from happiness, not the other way around. So I spend my time making myself as happy as possible. And the longer you trade, the more you realize that it's about managing yourself. It's about putting yourself in a good space to trade, but also recognizing when you're not in a good space. You know, maybe you haven't slept well, or maybe, you know, you're out a bit late night, or, you know, you're arguing with your partner or whatever. You know, whatever. If you're not in a good place, it's about recognizing it and actually taking yourself out of the line. All right. If you can't change your state, then there's nothing worse than trading poorly, losing, and knowing in the debrief that you should never have traded that session anyway because you weren't in the right place, you know, mentally and emotionally, you know, to do it. So I think that becomes psychology, but also the confidence to know yourself and to basically to know when you're in a good place, and to also to recognize, to have the self-awareness to realize when you're not at the races. And actually the best thing you can do is go and do something else, all right, because you're likely to trade poorly. And that takes confidence and experience, I'd suggest.
100%. You've been in the game a long time now, obviously. Do you remember your first big loss and what that kind of taught you?
Yeah. So there's a couple I would suggest. So basically I wasn't allowed to go live. So I'd done well sort of trading internet stocks, but as I said, I wasn't a trader. I was a lucky punter. And then a couple of years later decided, right, okay, this is actually, you know, I really enjoyed it, what I wanted to do. And I wasn't allowed to go live on the markets until I had put together 4 months worth of profitable trading on demo. Okay. that happened. I transitioned. I can remember my first day of like live trading FX. All right, it was absolutely fantastic. It was glorious. You're thinking, and then I had a few weeks worth of just, it just went really, really well. I can now look back and see, well, actually, it went well because you were trading a simple breakout system, and those FX markets where they were trending. So,
Yeah.
we're just in the right place at the right time with the right method, and it worked.
Mhm.
And what happened went really, really well. And then it stopped. Okay. And then it stopped going well. And the reason was it was kind of into August time. And basically the market's just
Yeah.
quietened down. And so trying to trade breakouts it was a futile endeavor in August because there was just no volatility to take it anywhere. And so there wasn't any big loss in that sense, but it was like a string of losses, which was unknown to me at that time. It was a string of losses. And of course, you start to look at all the different ways of why it might be. But the reality is that, I was trading the wrong method in the wrong market at the wrong time. Okay. And so basically there was the environment I was in. And actually I basically had to sort of step back and sort of, realize that basically that there was more to this game. It wasn't just as simple as putting a break on trade in the morning and stuff. There was
Sure.
more to it. To come back to our first conversation, because I was managing risk, I never risked more than 1% on any one trade. I lived to fight another day, which meant that even though I had a string of losses, I'd start to get data here. It's like, what's going on? It's just part of that journey of just learning more and more about yourself, about markets, about your method, about money management. So that was probably my first. And then a kind of a big loss I had was it was about 40 grand in an afternoon, 6% of my VAR. And it was, once again, I'm giving people more reasons not to trade in August. The reason we're working a mean reversion intraday system is working for a small fund, and it was an intraday mean reversion, and it had been working really well, kind of April, May, June, July, because the markets at that time were pretty quiet, and so basically it was very simple to do it. And as part of it, it basically, if the trade didn't play out, you would add to it, which worked really, really well. And the fund gave it to me to trade manually, and I followed all the rules. I followed all the rules really, really well, but it was like, I think, 3rd of August, and the Japanese came out with a policy change, and basically Japanese yen, which we traded, which had been in a range for months, just basically it blew out and continued tick tick tick. And I followed the rules and tick 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 tick. Added to the position, and then basically, because we always had rules, which I continue myself, like 6% VAR, that's the max. That's it. We hit that and we closed the positions, and it was about 40 grand. I think it's about 45 grand. It's about 6% of the VAR, okay, of the account that we traded it on. And the thing is, the next day it came back, and actually, it would have been a profitable position, but it was a case of we had followed the rules correctly, but clearly the rules were flawed. There was gaps in those rules that you could drive a truck through. And reality is, you only find these things out when you employ a strategy like that in the market. That you can back test it all you want. You can play with it. You can curve fit all you want, but it's actually it's only when you employ it that basically that's when you find out whether it flies or it dies. And in that case, and it died. Yeah. So there was a big learning point. Big learning point for me there on that.
I mean, that's going to kind of push us towards the current markets. But before I do that, I suppose as a trader, it's so important to be flexible with your strategy, right? Because like you said, you're trading in different environments all the time. You can be equally successful trading, say, the FTSE on that's ranging for a couple of months as you can trading any other asset class that's in a trend or whatever the case may be. But it's important to understand and identify, like you've said, what is going on in the markets and be flexible around your strategy to adapt to the current market conditions. And then that moves us on to the current market conditions now. I mean, obviously the markets are so reactive at the moment. It's if you're going to stick to your strategy that's worked for a certain amount of time and you want to trade them in these conditions and you're not going to be flexible with that, it's not going to work for you. What do you think of the current conditions at the moment?
Well, even in a modern world where so much of the trading is run by algos, etc. I still have a belief that markets are a reflection of human psychology. So humans, we surge, then we rest, then we surge again. Okay, and markets do that.
Yep.
We have had a year, the first 6 months, especially that kind of like second quarter, markets were in a surge, all right, both down and up. Volatility was huge, all right, and everybody talked about volatility, but volatility is a double-edged sword. When you're on the right side of it, it makes for great trading sessions. When you're on the wrong side of it, it makes for challenging sessions. We have had real high volatility, and now that kind of volatility is drying. The tide is going out. Now, admittedly, it's also into the summer, so I hear lots of people who are, especially kind of intraday traders, who've been doing well, okay, in the first 6 months of the year, but now are struggling because there isn't the volatility to basically to back them up. But the sign of a good, the sign of a good general, of a good surgeon, of a good midfield general in a sports team is that the ability to adapt to the conditions that you find yourself in. It's not always perfect, and your ability to adapt to what's in front of you, recognizing that all right, volatility is drying up. So why have I got super long targets on my trades? Okay, so for me, I will normally use like fib expansion levels as my targets, okay, but they get dragged in when the volatility dries up. So is my patience with a trade, in the sense of that, as long as it's hit a asymmetric reward to risk on my trade, then I'm happy with it, okay, because I'm not expecting markets to run. I'm not expecting trends to run as well as they have done in, let's say, basically since about October, November of last year. That kind of high period between sort of September to sort of April, May, that's when you get good trends. In this kind of summer period, volatility dries up. So, why would you have the same expectations for your trades? You need to adapt to what the market is telling you. The market is always communicating to you. It's your job to learn its language and understand what it's trying to tell you.
And stay disciplined within that. Just do you think discipline can be taught, or do you think that's something that you learn through experience?
I'll tell you it's a bit of both. I think part of it's also about. I would suggest part of it is like motivation. So when I went through my military basic training, okay, there is a lot of discipline and there is a lot of getting messed around. But because it's volunteer, because I wanted to be there, meant I was motivated. So I was motivated to basically to be disciplined. Furthermore, if you don't do your job, there is a whole ecosystem around you that basically will kick your ass from one side of the square to the other. Okay, for private traders at home on their own, they do not. Well, private traders on their own are the best salespeople in the world, because they can sell themselves that whatever course of action they decide to take is the right course of action. So, they can, I was right to take my stop loss away. I was right to sort of give that trade more room to breathe.
Yeah.
Because there is nobody holding them. There is nobody holding them accountable. In their day job, they've probably got a boss. If you don't do what the boss says, your work life's going to be miserable. Yeah. Trading, you get to just do and act however you want, and there's nobody holding you accountable. So emotional leakages, for want of a better word, can occur, which means that your discipline disappears. But also, you reach your discipline fatigue levels much faster. And once that has happened, then your ability to make just poor decisions, which lead to poor outcomes, increases. Yeah, discipline can be taught. There needs to be almost like a support structure around your success structure. That's what I try and kind of get across to traders. Young men in particular, they think that they trade in a silo. Basically, what's going on in the rest of their life has no impact on their ability to trade. When in fact, actually, you will realize that, it is all part of an ecosystem. It's all part, and you need to have structures and boundaries in place that help you perform at your best.
100%. Do you think there's any habits that you could maybe give advice for traders that would help with that?
Yeah. So having ring fencing time for trading, okay, can be a start of just a simple boundary in place. I kind of, when I'm in like London or Dublin or, just locally, you walk into a coffee shop and there's always some kid on there trying to, trade on his phone in a coffee shop and stuff, in a noisy, busy, contested way, and, I can't help but think, you know what, mate, you're being an idiot. Do you know what I mean? You're being an idiot. That's not a way to conduct yourself in the market. So you shouldn't be shocked when you get, taken out the
Yeah.
back and and done in. So what I mean is that it's better for you to ring fence some time, all right? Even if that's like 30 minutes a day, 1 hour a day, no distractions, no, just focus on, if you're not trading, learning about trading, working on your trading business, and having that. I also have I have a psychological fitness test that I take every morning. Okay, just like five elements that I test myself upon and I score myself on, because I've learned that you can get out of bed and feel all right, but actually when you have to grade yourself, then you have to be honest with yourself and see if, do you know what, I'm in a good place or I'm not in a good place. And also what I've learned over the years is that it's almost like an early warning system for me, as in when my scores start to drift lower, it's normally an early warning sign that I'm getting burnt out and I need a break, because if I don't take a break, the likelihood is my trading will be poorer 2 to 6 weeks down the line. So I've learned the hard way that
Wow.
filling in my psychological fitness test every morning, okay, it helps me. It helps me in the moment, but it's also helping me manage my future expectations. So yeah,
Does
so
that,
yeah,
does
there's
that
a,
go
there's
in?
a couple of things that can do.
Does that go into your like trading plan? So do you ever look back and go, actually, do you know, I had a bad trading day that day, and my score was lower that day, and you can see the influence of both.
Yeah, and so for me, a lot of that these days is the thing that influences my psychological fitness and my performance is sleep. Up until the COVID, then I literally, I could sleep in a washing line. I've slept standing up. I could just basically sleep anywhere, any place,
Yeah.
no bother. Bang, head hits the pillow, bang, I'm out, sleep, up, gone. But I don't know what happened. Sort of during COVID, my kind of sleep patterns got completely disturbed, and it had an impact on my trading. More so that I wasn't trading as much as I should have been, because I was just I was groggy. I'm just not feeling great at all. And as I said earlier, when I'm not feeling great, I don't trade because it's pointless. So I know that these days sleep has a huge impact on my ability to perform. So when I see that I've had like like a few nights of like zeros, I'm scoring zeros on sleep, well then I know that basically either I need to tread very carefully, because my ability to perform at the level I need to has probably been reduced by that. So it is, as I said, it is an amazing kind of it's an amazing habit to get into, and it's also one that as you look back on, you start to see parallels between when you're in a good place and you're trading well, and also when you're not in a great place and actually your trading performance sort of gets impaired as well.
And would you say that's one of the most important qualities that a trader needs in their journey?
Um, so one of the things I did was that years ago there was like a company called Accenture Analytics they did a load of interviews with portfolio managers, investment managers, traders on Wall Street to understand like what made for the best traders. And interestingly, the three things that came out was process, discipline, and self-awareness. Those are the three things, the three traits they kept seeing in all of the talkers. And these were guys and girls running like $10 billion funds plus. So real titans. And the interesting is to link to the earlier conversation is that military veterans, process, discipline, self-awareness, we're all very happy with it. The thing private retail traders can take is all three of those elements. They're not God-given rights. Anybody can learn that. Anybody can build that into their life, into their trading. But the big one is self-awareness. As I said earlier, young fellas tend to think they can trade in a silo, all right, but actually it doesn't. And part of that is self-awareness. Self-awareness about yourself, about knowing, once again, when you're in a good place, also knowing when you're feeling fearful, when you're feeling hopeful, when you're feeling greedy, understanding what that's like in yourself also gives you an ability to see that in the market. As I
Yeah.
said earlier, I still think markets are a reflection of human psychology. So, I appreciate it's easy for me to say, but naturally you want to be greedy when people are fearful, and you want to be fearful and greedy. That's that old Buffett adage. But there is a truth of that. As you gain more experience in operating in markets, and as that self-awareness, having that real self-awareness is a benefit to you as a trader, and also will benefit you in other areas of your life as well.
Sure. And tell me, obviously, you're a performance coach. Tell me, how much has that influenced your own trading? Because what I've found is the more I engage with people, even if it's me actually mentoring somebody else, it helps me to stay on the ball. It keeps me remembering my own rules, my own, what I need to be doing, because quite easily, even as a trader over 15 years, you can still veer off. Do you feel that helps bring you back into play, just regurgitating the same information over and over?
Yeah, totally. There's an element of it. Certainly on the educational side, so I talk about like 5 R's. All right, risk, reward, pay, recording your trades, reviewing your trades, repeating your trades, and of course, when you're talking about that constantly, it is almost you are it's going into your own brain via osmosis, and it is also holding you to a higher standard. It's holding
Yeah.
you to a higher standard. If I'm going to stand up in front of a room and talk about it, well, I want to be congruent in what I do, and I want to be able to sort of stand up and say, well, this is what you do, and because this is what I do, and so
Yeah.
it gives you confidence, it gives you strength, it gives you belief, and equally, it also forces you to clarify your own thoughts on markets, on methods, on money management, on managing yourself. It forces you to clarify your ideas, and by doing that, that basically helps you become a better trader, because you get clearer on who you are and how you operate in markets. So it most definitely has been a benefit to me in that sense. I've also just been fortunate to work with some exceptionally good traders. Either sitting alongside them on trading floors, or working with them one-to-one, mentoring, coaching them, and it's a joy. I find it's a joy to see someone exceptionally good at their job. They might trade in a completely different way than I do. That's fine. It takes many ways to skin a cat. But just to see a top performer operating at the top of their game, I take real joy in that. I love it.
Yeah.
It doesn't matter whether it's trading or Formula One or whatever. Seeing a top performer, being in their presence and being able to watch it, that keeps me inspired and motivated, and keeps me confident, keeps me wanting to always improve my own game as well. So, it's been a great joy and a great benefit.
I couldn't agree more. I mean, as a trader, it doesn't matter how long you're trading, you're always going to pick up more information. You're going to continue to learn. The day you stop learning is the day that you fall behind. And, even doing the podcast, talking to so many great minds, and just picking up small bits of really key information, whatever that is, and then integrating it into your own system, can really make a difference, so yeah, it's always a pleasure doing these podcasts. So I'm going to run over some rapid fire questions with you. Okay. These are just going to test you on the spot. We just, whatever comes out first, it stays out. So, tell me, what's the biggest lie do you think traders tell themselves?
It's like only fools and horses. This time next year, Rodney will be a millionaire. Managing expectations is poor.
Yeah, brilliant. How do you spot a trader who'll burn out?
Normally by their activity, their behaviour. Over the years, I've become very good at speaking to people and recognising whether a greed-based trader or a fear-based trader. The greed-based traders tend to burn out from overcommitting to markets, over trading. Fear-based traders, they burn out from their own fear and hesitation.
What's the hardest market lesson that you've experienced over 25 years?
The hardest market lesson is that, stay humble, all right? Stay humble, because if you don't, the market will humble you. The moment you think you're Billy Big Bullocks, you're about to get a punch in the face. So stay humble, all right? Stay humble, stay in your lane, stay learning. For me personally, I have to fight complacency. I know that I can be complacent, so that's one of the reasons why I have habits and behaviors and stuff to make sure I'm always doing the right things every day.
What separates a 6-month trader from a 6-year trader?
I'd say risk management, because they've managed risk long enough to stay in the game, and then I'd also perhaps say emotional resilience.
Brilliant. Ever felt like walking away from trading, and what stopped you?
No. So about 3 years ago, I had 3 years ago I had emergency surgery for cancer and stuff, and I had to go through chemo. They weren't sure if they'd got it and stuff. I thought I'd be done in a few months. And during that time, quite a lot of friends and family said, "Well, trading's quite intense. Surely, you must be ready to give it up and stuff." And I was like, "No, I love markets. I love engaging with markets. Love trading. I never get bored at looking at." Never get bored at looking at charts or learning about trading or getting better as a trading. Never, I can honestly say I've never felt like walking away. That's not to say I haven't had, tough times or challenging times, or I think, especially at the start of your career, there are going to be days. There are going to be days where you're going to finish the day with your head in your hands, thinking, "Why do I do this to myself? What am I? Why am I doing this? You're an idiot." But actually, it is how you respond to that. That is what probably locks in your next evolution to your next level as a trader. But no, not for me. Never had any desire to.
Good for you for fighting through that. How do you coach someone who keeps self-sabotaging?
So I'm probably a bit of an old dinosaur. I'd probably want to give him a punch around the back of the head and stuff. But I appreciate that in the modern world that is not really. But it comes back to that earlier point of someone at home, they don't have that accountability. So I run a little accountability group, and it has helped people because it has that. When it's harder to self-sabotage stuff when you have to get up and talk about your trades and explain them to people because you're being held accountable. So if you've got a real issue with self-sabotage, I'd actually probably suggest that you pay them money to go and work on a like an old style prop firm, where you'd actually buy a seat, and actually sit there and be around other traders, because actually that probably experience and having, maybe there might be coaches or mentors on there to basically save you from yourself, which, if I'm honest, a lot of my coaching work is, helping save people from themselves. So
sticking to the rules. Huh?
Yeah, that's what I'd probably say.
And do you think simplicity is underrated in trading?
Yeah, 100%. Totally, 100%. I've fallen guilty for this myself. That trading is simple, but not always easy. So, and I see this once again. I have to say, I'm not picking on young men, but I see that, given a simple system, and they think, and I was guilty of this myself, is to think, "Oh, well, it can't be this easy. I need to add layers of complexity. I need to add a couple of indicators, and I need to add this, and I need to add that, because that's what I need to do." And it's nonsense, right? It is absolutely nonsense. I've always said, because I've had experience, on the battlefield, the boardroom, the sports field, trading floors, a simple plan executed flawlessly will normally take you 80% of the way towards your target. All right. And that, once you're 80% of the way towards the target, you're in the game. All right. You're in it. So
I couldn't agree more.
Plan executed flawlessly is always, it's always my preference.
Brilliant. If you could erase one trading belief from people's minds, what would it be?
People would sooner be right rather than make money. So I'd erase the need to be right. That would help them probably more than anything else.
Brilliant. And can a trader succeed without journaling?
No, not long term. Not long term sustainably. I've never met or worked with a trader who has been long term sustainably successful who doesn't have a plan, and as part of that plan is journaling and recording all their trades. You might get lucky for a while, but you're not going to last as a trader without journaling.
Sure, you've got to figure out what went wrong. Huh? And what's one thing that you've changed your mind about trading?
Changed my mind about trading.
Maybe misconceptions.
It's kind of linked to, and it's linked to my own experience, is that one of the things that helped me was redefining what success meant. So I'd say about 18 months into my journey, I was doing okay, but it wasn't, I wasn't setting the world alight. I wasn't going to be, given a job at a fund at that time. And what I realized was that I had the incorrect definition of success. My success was very outcome based, all right, about generating so many pips per month, okay, and achieving financial targets, etc. And in fact, I redefined my success to basically, if I planned my trade, traded my plan, and managed my risk, the trade was a success, regardless of the outcome. Once the trader traded, regardless of the outcome. And so, if I did that enough, that made me a successful trader. And it wasn't like an overnight term, but it kind of like is like turning the super tanker and realizing that actually plan my trade my plan, manage my risk. There are all the elements I can control. So if I can control and I've done that, that's a successful trade. And if it's a successful trade, that means I'm a successful trader. And that starts to build self-belief, self-confidence in yourself. All right, it certainly did in me. As I said, it's not overnight. It's not. I wish it was, but it's not. But it perhaps underestimated the importance of managing your own self-belief and your own self-confidence, right? And the importance that has on your overall progression as a trader.
Yeah, great answer. And lastly, if you could give one piece of advice to a trader trying to build consistency, especially in today's kind of volatile markets, what would it be?
To build consistency? Well, I suppose that probably kind of links into the kind of that last response. Consistency is new traders have flexible rules and rigid expectations, and experienced traders have rigid rules and flexible expectations. All right, so it's completely opposite. And so if you're trying to build consistency, part of that is about having rigid rules. It's about defining success as plan your trade to plan, manage your risk, record your trade, review it, okay, repeat the good ones. So that's where I'd be suggesting that. So if you're going to build consistency, having rigid rules and flexible expectations, not the other way around.
Awesome. Paul, it's been an absolute pleasure having you on today's podcast. It really has. It's, without a doubt, our listeners will learn a lot from that interview. So thank you so much for coming on. And look, anyone wants to learn more about Paul Wallace, we'll have all your links in our socials and our YouTube and so on. So again, Paul, it's been a real pleasure. Thank you so much.
Fantastic. Nice to speak to Jonathan. Have a good day.
We'll definitely catch up again next time you're in Dublin, huh?
Yeah, I look forward to it. Yeah.
Cheers.